up a few key questions that the markets will seek answers to, and this is just the broad brush. I mean, the obvious numbers are about the fiscal deficit and the path of fiscal consolidation being followed or no. And while that has happened, is the focus on capex sustained, or does that see a bit of a compromise? Maybe necessarily so, but does that see a compromise at all? If both these things happen as per market expectations or better than that, then that actually be a win-win. So that is to watch out for, and I'll come to that. The other aspect, of course, is that will the budget focus on job creation, because that's been the big talking point. CAD, not a part of the budget, but is there a reference made to that? Because we are in a Goldilocks scenario as far as the current account deficit for India goes. Will the moderation of subsidies for FY25 be more than what the street is working with? Because that could also add a little bit to the kitty from on the government side. And then the other aspect is that will the central government borrowing number be lower? So these are essentially the key questions that the market will be working with. Now, I'll try and get to some specifics. So what to track, right? That's the most important thing. We are talking about there are maybe 8 or 9 items, but the 3 most important things. The fiscal deficit number for FY25E, will it be lower than 5.5%, 5.5% or lower? So I think that's one key thing to monitor. The government capital spending as a percentage of GDP, is it 3.3% of the GDP or lower? Hopefully the market doesn't see a number which is a significant aberration from this. And the revenue expenditure, is it lower or not? Because thus far it's below, it's about 12% of GDP. It's tracking about 12.1% for FY24 expected versus the pre-pandemic number of 11.1. So can we actually move towards that? That is something that the market will be watching out for. And divestment proceeds, that one place where we haven't been able to make a mark this year or the previous year are the divestment proceeds. Currently, the divestment proceeds are about 14.5%, only 14.5% of the budgeted estimates. What are the estimates for FY25? That's the other key aspect. And last but not the least, what will please the market, guys? Fiscal deficit number at 5.5% or lower would be in line with estimates. If it's much lower, sure. Realistic assumption of non-tax receipts in the budget math, like I said, below 600 billion currently. Will they estimate 600 billion or more? That's the key thing to watch out for. Capex growth, is it 10% or is it more in a year of fiscal consolidation? So that's to be watched out for. And the gross borrowing number, the market is currently working with a number of 15.2 trillion. It will be lower than 15.2 trillion. That's the key thing. But frankly, fiscal consolidation and the borrowing numbers, etc., all get clubbed into that, and the capex plan. I think those are the 2 most important things that the budget and the market will be watching out for.
In fact, those are the